Hey, soldiers, the government just published new inflation data, consumer price index data. The media is out there reporting it in the way the government wants them to. Now, this video, we're going to examine what the government is talking about and what's really going on. We're also going to show you how you can position yourself to benefit from inflation. That's very important. Now, the government wants to really present a picture that will have everyone believe inflation is under control. The reason for that is they really want these interest rate hikes to stop. And the main reason for that is the interest on our national debt goes up as the interest rate is elevated. So that will become a very untenable situation if the Fed paid attention to the real inflation numbers, okay, as they were measured pre-1980, and not the new measure that, manipulates the data heavily. But in order to slow down on those interest payments and have that amount of money not become just untenably astronomical in short order, the Fed needs to slow down on raising the rates. A lower inflation number will give them the excuse to do that. But we're going to see here, if we look at John Williams' shadow stats, if we look at the data, the way it was measured prior to the 1980s, we see that inflation right now is hovering around, if we look at that blue line, inflation's hovering around 13%. But the government is reporting a lower number. Expectations for this morning's headline CPI print were for a plunge from 4% year over year to 3.1% year over year. However, the government is reporting a much lower number than 13%. Expectations for this morning's headline CPI print were for a plunge from 4% year over year to 3.1% year over year due to shelter, used cars, and seasonals. However, what the Fed will be watching for is core services CPI, excepting shelter, which fell to 3.93%, the lowest since January of 2022. So the Fed is looking out for that because that will be one of the data points that will help determine whether or not we see additional interest rate hikes. Notably, the month-over-month increase in core services CPI, excepting shelter, was just 0.09%, the smallest month-over-month rise since September of 2021. Now, I want you to pay attention to something. The pace of the increase is slowing, but it's still increasing, okay? So we're going to talk about how you need to consider positioning yourself to benefit from inflation, but just know that when you hear these reports on the news, the bottom line is inflation is still increasing, just at a slower pace than we have seen it based on what we are understanding from the data that's being published. Now, even if you look at the shadow stats data that we took a look at just a moment ago, even though inflation is still at 13% real inflation, what you really feel when you go out to buy items at the grocery store or at the clothing store, it's still, even with that measure, it is still slowing. It's been a lot higher. You could see that on the chart. The headline CPI, Consumer Price Index, rose just 0.2% month over month, below the 0.3% month over month expected, which dragged the headline down to 3% year over year, cooler than expected, the lowest since March of 2021. This is the 12th straight month of year over year declines in headline CPI, equaling the longest streak of declines in history since 1921. But again, we were elevated. So even though we are continuing to see the pace slow, we are still, because they mix this language up. And it gives you can easily walk away with the impression that now we're, not increasing inflation, but we still are. But again, there are several ways that you can actually benefit from that. The monthly core increase, 0.2% in June, was the smallest 1 month increase in that index since August of 2021. So let's just look at some aspects of the economy. June rent inflation was 7.83% year over year, down from 8.4%, but still 7.83%. That's high. We're looking at fractions here when we look at that decrease. So it's still up. Rent. Okay, you got to have shelter, right? This is where that argument comes in. We've talked about it before, and this is one of the places where you will find inflation working in your favor if you have a mortgage or outright own the home, because that will mean that you should see some, depending on where you live, some price appreciation, value appreciation in your home. You're not going to see that in a rental situation. Your landlord will. And that landlord, remember, in most cases, they went out there, they purchased that property for one stable price that is fixed and now immovable. They're going to increase that rent in many cases every single year. So that's a very profitable position potentially for the landlord. But for you, the renter, you are on the receiving end of that inflation, while the landlord's on the receiving end of the revenue and profit. So if you own that home or you have a mortgage, let's take a look here. Okay, so according to the National Association of Realtors, and look, we're looking at a nationwide chart here. This is the total existing home sales and the prices associated with them. Okay, so we look at that chart. We got to remember that your particular area, because real estate is hyper local, so we're not going to get into a situation where every area matches this chart exactly. There are many areas of the country where we're seeing increased inflation in single family homes or existing homes, townhomes, things of that nature. And in some areas, depending on variables, it could be going down. And this can exist. Both these things can exist in the same county, the same zip code, okay, the same 6-block square area. A lot of variables in real estate. But what we see here is in the last few years, we've seen a decline overall in the price of housing. And again, this is a National Association of Realtors chart. Now, the reason why we are seeing that is, well, there are a few reasons. One of them is, of late, we've seen interest rates start to rise. So if you look starting at December of 2021, January 2022, that time frame, we see it spike, and then we've seen a gradual decrease ever since then. Now, that actually, as you might imagine, coincides with increases in interest rates, okay? So as the interest rate starts to rise, home affordability becomes, a little tighter for people. And so sellers of these properties have to give relief. Otherwise, their homes will be, when the interest rate on the loan is factored in, the home will be unaffordable. Real estate won't move. So the price in this case is the metric that is going to be decreased. We're coming out of an era where we had the interest rate decrease. So we saw a seesaw where the actual price of the home was elevated. Now, you can benefit from this by simply taking a look at the situation and saying, okay, in general, and again, this is hyper local. You got to look at your situation and your area that you're looking at buying property in. But there may be an opportunity to pick up the property at a multi-year low. Now, you might say, well, what about that interest rate? Well, the interest rate is the part that is variable over time. If we ever go into an environment where we see the interest rates dropping again, that gives the owners of these properties that were purchased at higher interest rates an opportunity to refinance and thereby lower that rate. So this is one example of how inflation can benefit you. When we see the Fed trying to control inflation through a higher interest rate, then there you go. You're able to take advantage of that. Okay, another way that you can benefit from inflation is, unfortunately for us as consumers, companies raise their prices. That is inflation, right? So when that happens, it makes things more expensive. If the company is well run and they can control the expenses that they are incurring to produce the product, then they could be in a situation where inflation gives them the opportunity to make more profit, all right? You see this in the grocery store especially, when you see like items that may have contained more potato chips, more cookies, or what have you. Or I've noticed that in Harris Teeter, they cut the steaks a little differently, all right? And it looks like they're trimming some of the meat off of there. I eat steak a lot, guys, so I know. Giving them an opportunity to sell you less, called shrinkflation, while at the sell you less at a higher price. And again, if they can control the cost, then they win. Now, if you are invested in the stocks of companies that are doing this, then that gives you an opportunity to profit along with them. And if you look at this chart of the S&P 500 over the last 5 years, we see that the index has been up 60%, and that is in a of late high inflationary environment ever since at least mid to late 2021, when we saw things start to spike. So we've seen real estate give us an opportunity thanks to higher inflation, and we've also now seen the same thing here with stocks. Now, stocks are just like real estate. You got to do a ton of due diligence. You can't just jump in and say, hey, we're heading into a higher inflationary environment that I believe is going to be permanent. Again, these numbers are rising still, just at a slower pace, but always do your due diligence. Now, the last thing we're going to take a look at here from the standpoint of assets that are appreciating is, let's take a look at gold. Okay, so if we go back and look at gold, let's just go back, let's take it all the way back to 1994 for gold. We can see that gold is elevated, right? Now, gold is unique because we can measure its value against a lot of different currencies, a lot of different commodities. Gold is stable. It is, in this case, the dollar that has been fluctuating in value. And when that dollar is up, then gold looks like it's down. When the dollar is down, gold appears as though it's up. But it is the dollar that's shifting. Okay, the gold is the lighthouse. It's stable. It's not going anywhere. But the dollar is the ship on stormy seas. And we can see that this chart going up, so gold is increasing in value, coincides with roughly the same time period the consumer price index increasing and things becoming more expensive. Inflation, okay, gold is a hedge against inflation, designed to have you maintain your purchasing power. So we're seeing that in gold, another asset that you can actually use to benefit from inflation. So it's not all bad, guys, but to win this game, we've got to understand that we need to own assets. If we can do that and we purchase those quality assets, and the only way we make sure they're quality is if we do due diligence. We own those quality assets, we can watch them inflate in value along with prices at the pump. at the grocery store, at the clothing store, what have you. Now, if you want to get more in tune with exactly how to evaluate these different asset classes, you need to go ahead and hit that join button. Find out what we have over there in the Officers Club for you to learn how to stay on the road to financial independence. Hit like, subscribe, and check out this video. You want to talk about a way to build generational wealth? Check out what this one family did. This family right here is well known in American history and world history. And look at what they did and are still doing to build and maintain wealth. We can do this, guys. All right. Guys, I'll talk to you soon.